Welcome to an in-depth analysis of one of the most debated economic legacies in modern American history. As we look back at the Trump administration, the narrative is often split between two extremes: an era of unprecedented prosperity and a period of reckless fiscal expansion. We will examine the hard data, the market shifts, and the long-term impacts of his America First policies. From the 2.5% average GDP growth to the volatile market swings, we are diving deep into the bombshells that defined his four-year term. Is the data as clear-cut as the headlines suggest, or is the truth buried in the nuances of global trade and domestic deregulation? Let us break down the numbers.
The 2017 Tax Cuts and Jobs Act remains the cornerstone of Trump's economic strategy. By slashing the corporate tax rate from 35% to 21%, the administration aimed to stimulate domestic investment and repatriate offshore profits. Proponents point to the S&P 500's record-breaking runs and a surge in stock buybacks as evidence of success. However, critics argue that the $1.5 trillion cost of the bill primarily benefited shareholders rather than increasing worker wages. We must look at whether this massive tax overhaul delivered the sustained investment it promised, or if it simply fueled a short-term market sugar high that eventually cooled down. Trump's energy dominance strategy was built on a foundation of aggressive deregulation. By rolling back over 100 environmental rules and opening up federal lands for drilling, the U.S. transitioned into the world's #1 oil producer during his tenure. This shift was intended to lower energy costs for manufacturers and consumers alike. While the production numbers were undeniable, the move sparked intense debate over the long-term environmental costs and the sustainability of a fossil fuel-centric economy in a world increasingly moving toward green energy. Did the deregulation provide a necessary spark for industry, or was it a step backward for global climate goals? The trade war with China redefined global commerce. By imposing tariffs on approximately $360 billion worth of Chinese goods, the administration sought to protect American manufacturing and reduce the trade deficit. The goal was to bring jobs back to the Rust Belt and force a fairer deal for U.S. intellectual property. However, the trade deficit actually widened to $679 billion by 2020, and American farmers faced retaliatory tariffs that required billions in federal subsidies. The results were a mixed bag. Some domestic industries saw a resurgence, while others faced rising costs for raw materials, creating a complex web of economic winners and losers. Prior to the global pandemic, the labor market reached milestones not seen in half a century. The unemployment rate dropped to 3.5%, marking a 50-year low. This period was characterized by 6.6 million jobs created and significant wage growth for lower-income workers, narrowing some wealth gaps. The administration frequently touted these figures as proof that their pro-growth policies were working for the average American. While critics point out that the downward trend in unemployment began in the previous administration, the acceleration and the specific gains for minority groups were notable highlights of the Trump era's economic portfolio before the COVID-19 shock changed the landscape. One of the most significant criticisms of the Trump economic era is the dramatic increase in the national debt. During his 4 years, the debt rose by approximately $7.8 trillion, representing a nearly 40% increase. While some of this was due to emergency pandemic spending in 2020, the deficit was already widening significantly due to the 2017 tax cuts and increased military spending. This fiscal trajectory has raised concerns among economists about long-term interest rates and the government's ability to respond to future crises. We must ask, was this debt a necessary investment in growth or a looming burden for future generations of American taxpayers? Infrastructure was a recurring theme during the Trump presidency, often summarized by the meme-worthy Infrastructure Week. The administration promised a $1 trillion plan to rebuild America's crumbling roads, bridges, and airports. However, a major bipartisan bill failed to materialize during his term, with much of the focus shifting to private sector partnerships that never fully gained traction. While some deregulation helped speed up existing projects, the massive New Deal-style overhaul many expected remained largely on the drawing board. This gap between the rhetoric of rebuilding and the legislative reality remains a key point of analysis for policy experts looking at the administration's domestic impact.
As we conclude, the Trump economic legacy is defined by its contradictions. It was an era of deregulation, tax cuts, and record-low unemployment, but also one of trade wars, soaring deficits, and a global pandemic that erased many of the early gains. For some, it was a masterclass in market-driven growth. For others, it was a period of fiscal instability. The 2024 economic outlook is heavily influenced by these policies as the nation continues to grapple with inflation, debt, and the evolving relationship with global trade partners. Whether you see it as a boom or a bust, the impact of these economic bombshells will be felt for decades to come.